Hey, welcome back. My name is Abraham Caballero. Thank you for joining me in this video. We're going to be talking about universal life insurance. Now, this isn't so different from whole life insurance. It really isn't. It's known to be very flexible, and I'm going to give you an example of what I mean by that flexibility. It's flexible, it's permanent, which means that it doesn't expire. And you also have something that's called cash value. This is known as, you can use it as an example, I would say it's equity within a home, like the home equity line of credit. If you've heard of that, you can use it to grow money, and there's different ways to grow it. We covered that in the previous video, in another video. So here, I'm just going to explain of what I mean by flexible, permanent. It covers you until 120 years, depending on the company. 121 cash value, the different options that you have to grow the money. But flexible is where I really want to elaborate here. So I'm going to give you an example, and this is I learned at the beginning when I was first starting off working with these life insurance policies. By the way, my history is not I didn't wake up, or I didn't grow up thinking or seeing any other insurance agents. It's not that I always wanted to go into life insurance or any type of insurance. Period. In my life, I went through, all types of jobs, ended up in the medical field, and then became a licensed paramedic. And so there, I wanted to learn about finances, of how I can accelerate growth, how I can, what options I have for retirement, how that works, how to set it up, and who I have to talk to. So as I started looking into that, I found it really interesting. I started picking up books. I started reading a little bit more, and I would talk to everybody at work about it. When I was working in the ambulances, I would actually walk around with a book, and the EMS pants, how they have the side pockets. So I would actually have one on the on my side pocket, and every time that I would get a chance, I would start going through. I would read it, and then I would share that information with other people that I was working with. So when I first started, some of my first policies, I remember there was a universal life that I set up for this lady. We had gotten on Zoom, I explained to her the different types of policies. There's three: the term, RP, and the permanent. So how we go through it, and we give them the options, and then they choose which ones they want. So when I did that with her, she chose an indexed universal life. I gave her a book so that way she can read over it before we moved on to the actual application. And she was going to be paying $300 a month. She was a teacher. She is a teacher, and she didn't have any benefits at the workplace that she was. And she wanted to start building money, also be insured, also being taken care of if she were to end up with something: cancer, stroke, heart attack. It's known as an accelerated benefit rider, chronic critical terminal illness, that they would just accelerate the death benefit. Okay, so because we set that up, and she was doing $300 a month, that was pre-COVID. That was in 2019, or at the beginning of 2018. When COVID came around, she lost her job, and now she couldn't pay the $300 anymore a month. So she called me. She's like, "Abram, I want my life insurance policy. I don't want to let it go, but I just can't keep paying the $300. So what I did is that I called the insurance company, and I told them, "Look, this is a situation with this person. What can we do?" And they said, "Well, Abram, she can pay $150 a month. It's guaranteed. It's not going to lapse. And she's going to keep the same amount of insurance. All her benefits are still intact. The cash value is just not going to grow as fast as it was, but everything is going to stay the same. We can do this temporarily because she's been already overpaying on the life insurance policy. So she's already been building cash value. Now, because it's flexible, she was able to bring it down to $150 a month, and her coverage and everything stayed the same. Meanwhile, her situation became better. Okay. In another instance of flexibility, my life insurance policy and the one for my son, whenever I would have extra cash, I would just throw it into a policy. So I was just paying that flat rate, and then I would have extra money, I would throw it into a policy. That just means that you're accelerating your cash growth, because now the compounding interest is going to start taking effect. In whatever year you're placing it, if you put it into year one, it's going to accelerate all that into the next following years. And the compounding is just going to be faster. Permanent policy, these typically go up to what I've seen is 100 and 120 years of age, even 121 years of age, if they're paid. Cash value, we have fixed, variable, and indexed options. so that way we can grow that money. And I explained that in another video, so you can mix and match, you can create your own policy and such. So I hope this is a very short video. I know that, because we're only focusing on a universal policy, and it's really not that much different from the whole life policy, except for its flexibility and the option to make it indexed. So if you got something out of this video, go ahead and let me know. Drop a comment below. Share the video with somebody else that's looking to get a study for their life insurance exam, and so on. If anything, again, my name is Abraham Caballero. Thank you for joining me today on this video. I hope I see you on the next time. If you have a topic that you want me to cover for licensing, I think we're going to be going over for writers. I'm going to look for the next topic to cover for this, and maybe we can help you understand something that you didn't already understand. So, or you're having trouble understanding. Anywho, I'll see you on the next one. Take care. Stay blessed.